Namaste everyone and welcome back to our channel. As part of Market Vision series, in today's video we will break down how markets performed last week on Friday, and we will also discuss how the markets are expected to react on Monday due to a lot of uncertainty. Markets are going through heightened uncertainty which is likely to last for some more time. A trade war might reduce global trade, and declining growth would also have an impact on India's economy. Our markets had already reacted to the tariffs, and since then Nifty has dropped 345 points, roughly around 1.49%, and Sensex has also dropped 930 points, around 1.22%. In this tariff war, there are few sectors which are already seeing huge impact, like metals, which has been crushed by 6.56%, and pharma sector too feared on the announcements to come maybe on 9th of April, due to which it has also seen a good fall of around 4%. However, financial services and FMCG sector has closed positive, which overall controlled the Nifty and Sensex from further sharp fall. The market atmosphere overall has turned increasingly cautious. Global markets tumbled amid recession concerns. US markets saw their biggest weekly fall on Friday, dropping in the range of 5 to 6%. Even Europe markets as well dropped in the range of 4 to 5%. Asian markets, however, curtailed the losses, and there was a drop only in the range of 1 to 3%. All the Asian markets may have a reaction to see maybe on Monday. We might continue to fall roughly around 1 to 2% again. So over the weekend, couple of countries, or couple of presidents and prime ministers, or their foreign ministers have already got in touch with President Trump, and notified about tariff discussion, and how there can be a agreement that could be made. So we might see some reactions, due to which that would have an effect on the market. But yeah, overall we might surely react based on how the impact that has been seen in the Europe as well as US markets because of the trade war. Lastly, oil has been trading low due to anticipation of low demand amid the tariffs escalation. WTI crude is trading at 62 levels after a drop of 7.41%, and Brent crude is at 65.58 levels with a drop of 6.5%. Oil definitely would act as a savior. A drop in oil prices would definitely act as a savior for the Indian markets, because we highly dependent on oil imports. So the lower the prices, the better for our economy and also for the government in terms of the trade deficits. So now let's analyze on charts what can we expect markets to do on Monday. So this is a Nifty 50 chart. Okay, so as you could see, we had already seen a good drop, on Friday itself, based on the previous day's reaction from the US and Europe markets, and also on Friday based on the US futures market, which was already showing down by about 3%. However, in reality, it had closed 6%, during the market session. So now we might again see post reaction to it on Monday, where maybe another further 300 points is what we expect the market to fall down. If there are anticipation of heightened tariff rates on pharmaceuticals, then we might further expect the market to drop, or correct until at least 2400 to 500 range. So this would be the first 22,600 would be the first level or the support that we might see. In case if this support is broken, then we might see somewhere around 22,400 to 500 levels where Nifty is expected to come down. So now if you see from these levels where the previous resistance Nifty had taken are roughly around at 23,800 levels. So this was a typical level at which someone can easily shorted the market, because post this we had seen there was once twice the market had touched at this level, and then there was no coming back to these levels further, and then from these levels around 23,700 to 600 levels we are seeing markets at 22,900 levels. So roughly 600 to 700 points correction has already been done. Okay, and maybe on Monday the market might further correct around 300 odd levels. So it's around 1,000 point correction that we would have made from these levels, from where the reversal actually happened, and this was very clear indication that the market is not able to sustain at the higher levels, and then from there it just continued to slide. So what to expect maybe on Monday now, if there is a gap down? If there is already a gap down of roughly 300 to 400 points, maybe we have to wait until 9:45 and then 10:15. If there is a recovery post maybe 10:15 that comes, then the last dip that we would have had in that 45 minutes or maybe 1.5 hours, that should be considered as the low for the day, and then maybe we can go long. Okay, not heavily but partially. Second thing, what if there is a continued downfall, and each of the low levels are getting broken, then it is better that this could be considered as the resistance, and then go short in the market, because we have uh, Sensex expiry too on Tuesday, and then we also have Nifty expiry on Wednesday. So and also we have RBI policy that is expected to get announced on Wednesday 9th. So we are surely going to see a lot of volatility in all the 3 days because of the short expiry and the tariff whammy that we have already been seeing. So we have to trade very cautiously because these are not the zones to buy. Maybe if RBI drastically changes its stance and there is a drop in the repo rate, maybe that can lift all the banking stocks, which might also lift the Nifty and Sensex indices too. So we'll wait, but yes, at the lowest dip that we are expected to have maybe on Monday, that should be considered as a buying zone. And then in case if that zone is curtailed, then we might see Nifty might close in the range of 22,500 to 22,900 levels by Wednesday expiry. Let's understand from the perspective of open interest. Now if you see uh, on Friday opening, we had roughly around 30% uh, put winding that was seen at 23,000 levels, and then at higher levels too, at 23,200, 23,300 levels we saw a lot of put unwinding that has happened. So this suggests that the put writers are not willing to hold or maybe take losses because Nifty may not come at these levels until expiry. So majority of the selling already has happened. This very evidently suggests that market is on a downfall. Now the another important factor to consider is the high call additions at each of the higher levels. Now if you see at all the levels there have been Lot of selling that was seen on the call side. So lot of addition means that call writers are confident that market is never going to come in this range, 23,000 levels and beyond. And we also see at 22,500 levels alone, we see a good support that is emerging through the put positions. Now overall, this very clearly shows that market is in a bear zone. Okay, so looking at the PCR levels too, so it is at zero point 0.6, which is very bearish. PCR at the money is also 0.66, again not at all good. So it is a clear indication that there would be a sell-off in the markets. Now let's try and understand from Sensex. Even Sensex has fallen in the similar pattern. So this level is where from where the Sensex had started uh, making lower lows. Now 77,800 was this level from where the market started falling. So whosoever had shorted at these levels, from there till the last days closing, there is roughly 200 points or 2,500 points drop already. So can we expect the market to further fall? So Sensex surely can touch these levels, 74,000 400 levels easily, because from this levels is where we had started seeing the strongest buying levels. So we might come to these levels first, touch at these levels zone. If there are good buyers who are adding the positions at this level, then maybe we can consider that this could act as a bottom. In case if we do not see any buying that is happening and no support that emerges at these level, then we might continue seeing the downfall further for Sensex. However, we have to see and understand that whether a 1,000 point or a 2,000 point fall would clearly bring a buying opportunity maybe on Monday. So looking at these levels, these are the levels where we had previously seen a lot of buying that had happened. So even tomorrow we might see buying might emerge at the lower levels. So if we see some signs maybe in 5 minutes chart, then that can be considered as the bottom, and certain um, maybe uh, put options could be sold, uh, at the money put options could be sold, because those would not be much riskier, even though if we might see like 300 to 400 points drop from there on, because immediate next day Tuesday we have Sensex expiry. So if tomorrow market is expected to be volatile, then maybe on Tuesday during the expiry we might not see a lot of volatility, or maybe closing of Sensex in one single direction. So we might see some choppiness and then closure. But yes, tomorrow's closing is very very crucial in terms of understanding how the markets is expected to move maybe on the weekly expiry. Now let's understand from the perspective of open interest. So similarly like Nifty, here also we see there is open interest that were seen as unwinding. Lot of put positions were closed. This very evidently explains that the put writers are not at all confident to hold the positions at the higher levels, and they anticipated that the markets are on a downfall and this would lead to losses for them. That is when a lot of positions were already squared off, and then maybe at the lower levels those positions would have been taken, or that would have been converted into selling of call options. Now if you see, there have been high additions in the call options at each 500 point levels. So this very clearly suggests that Sensex is not expected to close above 75,500 levels. So this is very evidently been seen. Or maximum, if Monday, uh, after the choppiness, the market tries to show some rebound, or at least maybe is trading in the range bound scenario, then maximum we can expect on Tuesday the markets to come towards 76,000 levels. This is where we see a lot of call positions, and there is good strength from the call writers. So it is surely difficult after tomorrow's close to further reach back to 76,000 levels. Now from the perspective of PCR, overall it is zero point 0.7, which is very weak, and then at the money it is 0.6. Again, it is a sign of weakness. So even Sensex, we might see there is a downfall that is expected on Monday, and this could continue maybe Tuesday as well with a choppiness. Moving on to Bank Nifty. Bank Nifty comparatively has been, very positive. So despite 1.5% in Sensex as well as Nifty, there is only 0.18% fall in banking stocks. Now, banking stocks have clearly emerged as, strength overall. And if you see from, a good 8 to 10 trading sessions, banking stocks are not, showing that weakness at all. Despite, Nifty has been sliding in one single direction. So we have to, closely monitor Bank Nifty, how it is expected to perform, given the fact that out of all these sectors, it is only the financial services sector which is holding and not letting those profits to get out of the hands, despite the major indices have been showing weakness. Now these levels is what which we will have to keep in mind. So from these levels we might see a very strong rally in Bank Nifty. Now tomorrow, if there is a gap down that we might see, then 51,000 levels is where we would first touch. And if there doesn't if the Bank Nifty doesn't pause there, then maybe it will cover this gap that we had somewhere around 50,500 levels. It might come, and then maybe a sharp rebound is expected to be there, and then Bank Nifty might come in this zone, parallel zone. So if Bank Nifty starts trading above 51,000, that in itself would be a positive sign, and maybe we might expect Bank Nifty is someone, or something which can rebound very quickly, and that might also lead to the broader indices to trade in the positive zone, maybe in the coming weeks too. So very close monitor is needed on banking stocks as well as the overall Bank Nifty indices, which is only trading in positive zone as of now and has good strength. So let's start understanding from open interest. So since Bank Nifty has monthly expiry, so we do not see a lot of changes in the open interest. Yes, at the higher levels we have strong resistance, and at lower levels we have strong support. So now on Monday we might see Bank Nifty trade below 51,000 levels in the initial stage, and if there is a broader sell off that comes, maybe we can see another 400 to 500 points down, roughly around 50,500 range. But there is a strong support at 51,000 levels, so it is not going to be a easy sell off. Okay, in case if it comes to, maybe we can see towards the end of the day there is some buying that could emerge, at least in Bank Nifty or banking stocks. So from the PCR perspective also, if we see it is trading at it is in the range of 1, which is surely positive, and at the money is also at 0.94%, again not bad. So Bank Nifty definitely could be the first indice which can show positive signs on Monday, despite the overall broader indices being sold off. Now let's understand from the perspective of FINNIFTY. So FINNIFTY has become little bit weaker compared to the Bank Nifty. Uh, we surely saw a kind of um, shooting star you know pattern, or maybe candle, and this candle definitely shows that it is a indecisive candle, where neither the sellers were able to put a lot of pressure on breaking down, neither the buyers were able to push up and take forward. So maybe tomorrow we have to see if fin nifty starts trading below 24,500 levels. If it comes, there could be a bit of selling pressure that can come in, because this zone multiple times fin nifty had touched once, then twice, and then thrice. So at each level there was a buying that had come in, and it lifted the fin nifty at the higher levels. Now, considering the overall sell-off in the broader indices, we might surely see fin nifty again coming down at those same levels, and if it doesn't trigger buying at those levels, then we might gradually see some sell-off, maybe in a day or 2 days session. Okay, so let's now understand from open interest perspective. So there have been, in fact, call unwinding that has happened at 25,000 levels, and there is slight additions in the puts at 25,000, and then 50% additions at 24,800 levels. So it is very clearly seen that, since fin nifty is again trading on monthly basis, so at the extreme ends, that is 24,000 levels and 25,500 levels, is where we see lot of put additions that has happened, and these acts as a strong support as well as resistance for fin nifty throughout the month. uh, Considering that the small supports that we have at 24,500 levels, this would act as a immediate support on Monday itself, and if this breaks, then we do not have much support until 24,000, maybe 200 levels, so which is far from the existing close of 24,774 levels. So 500 points downfall on a strong index uh, is bit difficult. So however, we have to see how the overall markets are expected to react on Monday. So from the perspective of PCR, it is zero point 0.8 overall and 1.02 at the money. So this definitely shows a good strength that can continue even on Monday's trade. Despite maybe the overall broader markets might fall, some strength could emerge on the banking and financial services stocks. Lastly, we will understand from the perspective of how the participation from foreign institutional investors, retailers, and the proprietary traders have been as of Friday. So FIIs have been sellers on index futures, and they added additional positions too. So they are short by 86,592 contracts. On stock futures, they are long. However, some positions have been cut down. So 15.29 lakh contracts they are holding on stock futures as long. On index options, so they are heavily long on call options, and they are heavily long on put options too. So this overall net, if you see, FIIs are net short on the indices. From the perspective of proprietary traders, they are short, mildly short, I would say, on index futures, and they are mildly long on stock futures by 4 lakh contracts, And on index options, they are short on call options, and they are also short on put options, mildly short. So overall net net, again, proprietary traders are also short on the indices. Now from the perspective of retailers, so retailers are long on index futures, which is bad because FIIs are short, proprietary traders are short, however retailers are long. On stock futures, again, they are massively long by 18.82 lakh contracts. On index options, again, they are heavily long. So this in itself, is very evident that the retailers are going to massively, face the losses, and the margin calls would further, impact them on Monday's trade. So on call options, they are short. On put options, they are double short, which clearly means that they are expecting markets to go long. So it is very clear that whenever the client or retailers are long, we have to be cautious, and that is going to be the biggest mistake, and the losses that could be seen. So just see the impressions of FIIs and proprietary traders on index options and futures. If they are short, it is better to be on short side. So this is definitely going to be, market is going to be definitely against the retail traders on Monday's trade too, and they might massively face the losses on Monday's trade. Now from the perspective of cash markets, so domestic institutions have sold 1720 crores, and foreign institutions have also sold to the tune of 3,484 crores. Now, whenever both the biggest participants are short on markets, it is very evident that markets, will have a knee-jerk kind of scenario, a fall on Monday, and then maybe slightly, if there emerges positivity, and bottom that is seen, from that bottom maybe we can see some recovery. But if the sell-off continues, then we might further see a lot of cash market position sell-off too happening on Monday by FIIs as well as DIIs. It is after a very long time that both the institutions have been short on any given day. So each time either it is FIIs who would be short, or it is DIIs who would be short, but one of the participants always used to be long. So net net there would not have been much impact. However, on Friday's trade, both of the institutions had been net sellers, and that had impacted us, and that impact would further be seen if the sell-off continues on Monday too. So it is going to be very scary day if our market falls beyond 2%. Okay, so let's see if there is any positivity that emerges. If no positivity emerges, then it is good to continue with the call sell-off positions. All right, so that's it until tomorrow's market opening. If you like the video, please do like, share, and subscribe to our channel. Thank you.